Success is achieved and maintained by those who try and keep trying. W. Clement Stone. My friends, each and every day, 10 to 15 minutes. That is all we ask. Those of you who are serious, I hope you have in front of you your weekly market worksheet, because this is the weekly review and forecast. And that's what that weekly market worksheet is all about. Want to know how to fill them out? I'm going to again put at the end of today's video the 3 instructional videos on how to fill out the daily market worksheet, weekly market worksheet, and that all-important trade worksheet. Those worksheets are in your show notes every day. There are PDFs attached. If you're not a subscriber, go to chartingwealth.com, sign up. You'll get all the special trainings, the PDFs, all the things that we put out on a daily basis. This is a very, very important training video for you to take a little time with over the weekend. It's in your show notes. The secret of profit and loss bands. I want you to learn what those are, something we developed. They are magical bands. Now, let's jump into these charts. Stocks up for the day. Bonds and gold resumes its downward move. Let's see what's going on. Look at the S&P 500 weekly vertical crossover. Started very slow, starting on Friday the 13th of November. Then the next week, that's where it was really slow, trying to move up some the following week, and then hitting higher highs this week, moving up. Nice green up candle. Pretty to see. It sure took it a while. Price percent oscillators pulling away from the red signal line. Derivative oscillator heading up. 2-day chart. It crossed over back on the 9th, 2 days before. The weekly vertical crossover, which was on the 11th, not depicted all that well on the version, the 2, you can see it on the weekly version. On the 2-day, not as easy to see as accurately. What do we see happening there? We see, again, the price percent oscillator heading up, losing a little bit of steam, it looks like. Derivative oscillator losing some momentum, but reaching higher highs. Now, this is only the first day of the latest 2-day candle. It will finish drawing on Monday, but moving up quite nicely. Look at the 4-hour. It's just been tagging right along the red signal line, but it is managing to stay away from crossing over, going down. Derivative oscillator lost a little bit of energy at the end of the day, and we have seen where we've just bumped with these red spinning tops right there on the 4-hour, well, the half-day, 195-minute trend line. That's where we are. Ended the week nicely. What about the Nasdaq 100? Were you watching, paying attention? We talked about the possibility of a weekly vertical crossover. Look at it. It is right there, exactly the same. The price percent oscillator, if you look at to the left, and I'm having to hold the cursor down so you can see that on the right, but if you look to the left, down below that first horizontal line, PPO 1024, that's what the PPO is set at, 10 and 24, but you see 5.52, and then the exponential moving average 8 period, 5.52. It is exactly the same. Technically not a weekly vertical crossover, subject to a bounce off. We can just wait and see what things do. I know that some of you went ahead and committed, even though it was a very close call. Again, doesn't hurt to try those things. I don't discourage that when you're practice trading. I want you to make sure you're filling out your trade worksheet. If you did that and you entered into that trade, again, higher high, bigger week. Nice to see things finally taking off. We'll see just how long that goes. What do we see on the 2-day chart? Again, this would have given you some reason to be a bit hesitant. On the first day of this latest 2-day candle, we did not reach a higher high. Again, we are above the 2-day trend line, and that's good. Price percent oscillator lost a little bit of energy this first day of the latest 2-day candle. Derivative oscillator gaining momentum heading up. Half-day chart, you can see where, again, you saw a bit of a blow-off of steam there. And again, price pulled through the the half-day, 195-minute trend line. Didn't cross over going down yet, but the derivative oscillator's been losing momentum for quite a while. That's where we are with stocks. So we did not have a weekly vertical crossover on the Qs. What do we see going on with bonds? They were down for the day, 1.47%, big down. Now, remember, bonds were still in a confirmed down move. The prior 2 weeks was an up move, but we ended with a red down candle. Actually, the low during the week was 154.77. The prior low, 154.63. So didn't hit the prior low, but did end up with a red down candle. Did have a wick on top. So again, not a super strong down candle. Price percent oscillator, derivative oscillator heading down. 2-day chart crossing over, going down. Now, why is this important? Because it is potentially a 2-day recross. Candle hasn't finished drawing. That'll happen on Monday, but it's important to note that in your show notes. Go ahead and tag your calendar to check at 3:50 p.m. on Monday to see if you have a 2-day recross going down for a potential jumping in point for a down move on TLT 20-year bonds. Why? Because the 2 days in a confirmed up move at this point until this candle finishes drawing. No candle finishes drawing until its time period closes. And this 2-day candle doesn't close until the close of the market on Monday. So mark that. Weekly, of course, is already in a confirmed down move. So it's what we call a recross. When the 2-day recrosses in the same direction as the weekly. Mark that. And again, what do you see with and this is something for you to keep watching, we've pegged on about the same down movement for a day and a half. So see what happens on Monday if indeed things move down stronger and longer. Derivative oscillator lost a little bit of energy on the half-day chart at the end of the day. Price percent oscillator heading down. Lastly, we go to gold. Gold down for the day. Gold had been trying to make some up movements, but this weekly candle, all things being equal, the market tends to move in the direction of the largest chart, which is that weekly, which again is still down. Price percent oscillator losing a little bit of that downward energy this week on the price percent oscillator. Derivative oscillator gaining momentum. We go from the weekly to the 2-day, and of course, what do we see? First day of this latest 2-day candle. As far as the Heikin-Ashi candlesticks, remember that means average pace in Japanese. Sure want you to have that training. If you've not taken the Heikin-Ashi training, most popular of all of our trainings, what we're probably at 200,000 now. Anyway, want you to have that. I'll put that during the video. You can look up at the top right-hand corner of the screen. You will see that training available to you. See the price percent oscillator still negative, heading up. And we see the derivative oscillator losing downward momentum. So we'll see how that candle finishes drawing. And again, we're still in a confirmed down move in gold on the weekly and the 2-day. We look at that half-day chart. What do we see? We broke that trend line at the close. Well, right, we stayed, just barely stayed there, I guess, yesterday toward the close. And that is a little strange. What is going on? Why is that? It was in the aftermarket. That's what was throwing me. It stayed there in the morning, and then it lost it in the afternoon on Friday. The thing that I just switched from, for those of you not aware of it, there is regular market hour data and there is post-market data. I kick that post-market data in, we get an extra candle on that half-day chart. So that's what was throwing me. Why was that saying when it should have been a morning was telling me that it was an afternoon? So that makes sense. So what we see happening on the regular hours, and this is the cool thing about, again, if you subscribe to TC2000, the paid version of freestockcharts.com, you can download, of course, the layout that we use, and you get both pre and post hour charts, which is really, really cool. Derivative oscillator losing momentum, price percent oscillator still heading up. So again, we'll continue to watch in gold. For those of you looking to jump back into any potential down move in gold, keep your eye on that half-day chart. Not a big fan of half-day recrosses, but the weekly and the 2-day are still moving there. So let's keep an eye on things. Not telling you to trade that, just keep an eye on it, see what you can learn from it. Folks, that's where we are as we end the day. If you don't have our book, Charting Your Way to Wealth, Treat yourself to an early Christmas present. I have an autographed copy waiting for you. Patreon members, we recorded on Wednesday the live Q&A session. And if you don't have it, check your emails because I mailed it out to everybody. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.